Hey guys, so welcome back to another Friday portfolio review. And today I just want to talk about a few things that I learned this week trading in the stock market and a few things that might have helped me hedge my losses better during this time where the Dow sold off more than 3,000 points in a single week. Now, one of the main things we did see this week was the Powell conference and him explaining what he thought about the market as a whole and whether or not he thought the economy could recover quickly, as well as considering negative rates into the future. And essentially, both of these things, he decided that no, the economy wasn't going to recover to how it was before anytime soon. And even in the next year, he expects the economy to recover to 5% unemployment. So these numbers are not spectacular, and especially they're not what the stock market wanted to hear from their shining star. Now, Powell was one of the main reasons why the stock market had been going up and up and up with no end in the last few weeks to months here. And now that he comes out and he sounds very shaky on what he's saying, a lot of people interpreted this as a time to sell off, and so a lot of people did. Now, essentially, what did I learn this week? If you remember our portfolio review from 1 week ago, from last Friday, we were sitting at around the $800 range after a really good play from American Airlines. Now, after doing that play, I decided that it was probably better to continue buying more calls and to continue betting upwards. And I kind of ignored the risk that could be happening with all these events lining up. Now, there was too much positive in a short amount of time for the stock market not to pull back a little. Now, I didn't expect 3,000 points of a pullback, but I was expecting some. So when my account came up to $1,000, I kind of figured that we had seen the worst of it and that from now on out it was going to be an upwards trend. However, what I failed to consider was that Powell's meeting might be extremely impactful in what people think and what people the way they judge the stock market. And it really was. My account dipped all the way to around $817. And this is one of the first mistakes I made here. Now, I could have withdrawn all my positions for a grand total of $991 and only been around $30 or $50 into the loss. Now, why I didn't do that is honestly beyond me. I thought that I was going to continue earning money. I thought that my positions were rock solid and that I basically couldn't be wrong. However, this is untrue in the market where I only own a couple shares, a couple options, and because of this, my position really doesn't mean squat in the grand scheme of things. And you can see what really happened to my account. It dipped all the way to around $710. And the reason why you're looking at an account total of 831 right now is because of two extremely good plays that I made. And in a way, it's called hedging. Now, what is hedging is when your whole account is in one direction. 80% of your account is what you believe the market will do. So in this case, 80% of my account is saying that the market is going to go upwards. And then the whole rest of the 20% is how you hedge your bet. Now, what this means is that you bet in the other direction in case of a market loss or in case of a market turn in the other direction. Now, what options did I buy to hedge my bets? Well, I bought a AMD put for around $2 or $3 out of the money, and it did come into the money, so that was around $150 gain. And then I bought also a put on DKNG, or sorry, a call on DKNG. And sometime this week they dipped all the way to around the here. Well, I can actually show you. I can pull it up. But essentially, a lot of these plays that I made were just on the fly. I wasn't really thinking of any play for the long term, and the only real hedging play that I had was actually Snapchat. Now, the DraftKings, they dropped to around $36, and this was around a week ago. You can see here this huge drop all the way to 35.48. I got it for around $36. And then immediately in the next few hours, it rocketed to $38. This came out with around $125 gain, and that's just in a single day. So both of those positions got me around $300, which if I would have sold out at the 990 range, I would be sitting around $1,300. However, since I didn't, I also had to take the losses on some of these plays. The good part about all this is that a lot of these plays are still very close to in the money. This Jets call lost a lot of value very surprisingly fast because it is sitting around the I think 20 something dollar range, 20, let's see, or actually 17, so that it sold off very strongly, and that's actually might not come back into the money anytime soon, but unfortunately I do still have a month left. Now the AAL call still is very close. This is around $15 and I have the $24 call. So it might be able to recover. It's still holding up its value here. Another thing is that it is a monthly contract, so it has a lot of time to recover and come into the money. And then this WFC, this Wells Fargo call, I was actually very sad about because I was up almost $100 on it. And in a single day, it flipped to being down 92. Now, in the last 2 or 3 days, this BAC call and this WFC call haven't changed in value literally even a dollar. They're literally sitting at the same price they are. And when this WFC or BAC continue to come back upwards, because the reason why I bought them is that I felt that tech stocks were reaching their maximum value and that the industry was going to have to rotate into other stocks that still hadn't seen an upwards movement, such as banks, airlines, cruises, or hotels. And that's why I also wanted to buy into MGM, which I feel that if the market continues trending upwards here on Monday, I will probably buy a contract for them at the end of the day today in about an hour. Now, what exactly am I playing for Monday? You can see that the SPY is exactly break even 0.00% on the day. And what that means is that it's not showing any clear direction for Monday. So I'm very afraid to buy plays right now. And I might wait, but let's say there is a huge sell off before close or there is a huge buy in before close, then I will probably make that play towards Monday and make a few plays depending on what happens and what I see, because we are kind of waiting for the market to recover. Now, at the low of the day here, I did buy these play shares, which was just around 5 shares. And I am trying to buy a few shares here to kind of hedge my position as well. Shares are very long term, and I want to start building a long term portfolio as well, and not just have options floating in my account. Now, another thing that I did learn during this week is that you could only lose as much as your contracts are worth. So if you do keep some money in your account, you can see that I have $417 in my account just of buying power. That means cash that I could pull out at any moment. Then you really don't have to take into account that risk, and you don't have to consider that risk. Now, if you do look here, this is my overall losses. If you do look here at today's return, you can see that all of them are positive except for the Snapchat. And what essentially that shows is that there are a lot of opportunities in this market now after this move to buy into good positions and to buy in and make a profit even when the market is down. The market has literally been selling off all day today. You can see that we're break even and we haven't made a single penny on the day on the SPY. However, literally my BAC contracts are up $12. The AAL is up $30, so that was pretty substantial. And you can see that a lot of them are recovering even through these bad market times. If I was holding 10 of these contracts at the lowest value, I would have made $300 today, and I could realistically buy 10 of them. So what I'm saying here, guys, is watch out for opportunities here into the future. This was a very weak Friday report, but I do feel that we're going to have a lot of bullish motion coming into Monday, and a lot of things that could be affecting the market here that you should watch out for is the fact that since these protests have been happening in the US, now that a lot of people are coming back home, they are going to be infecting their families with the pandemic and with the virus that has been going around. So you have to be very careful of these things, guys, because they could signal a market downturn and they could cause people to sell off their positions and be very bearish here in the short run. However, in the long run, I feel that we have recovered so heavily that this is just another sell-off. Even though it is the biggest sell-off since March, I feel that positions will continue trending upwards, especially those that have been hit the hardest, such as banks, airlines, etc. So yeah, guys, keep a close eye out for these. As always, don't forget to like and subscribe the video and watch out for those plays.